Hello friends, how are you? I hope all of you are doing really good. So welcome to another revision session, and before we proceed, one request, please share with everyone and do not forget to subscribe to this channel. Okay, so now what we are going to proceed with is in this lecture we'll be doing with the process costing now. Process costing, another important topic. Now, first try to understand what is a process costing. Process costing is majorly, if we talk about it, is applied in the manufacturing sector. It is applied in the manufacturing sector. That means where a product has to pass through multiple processes before it is converted from raw material into finished good, right? So it is majorly applicable in the manufacturing sector where the product has to go through multiple processes. So we need to find out that at every level, at every process, what is the cost that is being incurred, right? So for that, what we do, sir, we prepare the process account. So in the first process account, let's talk about the process one account. Let's talk about the process one account. What will happen in the process one account, sir? What will happen in the process account one account? There will be material cost to direct material, right? There will be material cost. Then there will be labor cost also, right? Then there can be some direct expenses also. There can be some direct expenses also, sir. After that, there can be the overheads also. Yes, sir, overheads can be there. Now, the whole of this cost has been incurred in the process one. From process one, the product will be transferred to process number two, right? And what will be the value of that? Here we'll write by process two account, right? Whatever the cost has been incurred here, at this cost only, it will be transferred to process two, right? Now, when you will prepare process 2 account, you have to be very careful here while preparing the process 2 account. When you will prepare process 2 account. So, what is one thing that you have to be careful about, sir? The first thing that you have to write here is to process 1 account. That means whatever the cost has been incurred in the process 1, you have to take it in the process 2, right? And in the process 2, then the additional cost will be incurred. So here it will be direct material cost additional, which will be incurred in the process 2. Here it can be the labor cost also, right? To overheads also. From here we can transfer it to process 3, or we can transfer it to FG account. Right, we can transfer it to FG account also. Clear, sir? Any doubts in this thing? Right, so this is how the process accounts have to be prepared, very basic. So the process costing is usually applied in the manufacturing sector. A product passes through various processes. The input of the one process becomes the output of the next process, right? So this is what you have input in this process. It becomes the input, the output of the one process becomes the input of the next process. The output here, now this is the output here. The output of one process becomes, here it becomes the input, right? So output of one process becomes the input of the another process. Clear? After that, the separate process accounts are prepared for each of the processes. The following accounts are normally prepared in the process costing. So process account, this is how the process account is to be prepared. You will write particulars, you will write units, rate and amount. How many units you have introduced. In case of the direct labor, this units will be nil. Direct expenses, factory overheads, no need to write the units, right? Only the amount column will be there. For material, how much of the units you have introduced. And when you are writing it to next process or finished goods, again you have to write the units here, right? So this is how a basic process account is prepared. After that, the finished goods account is there. In the finished account, you will first take it from the process account, right? Whatever is the last process account, that means here if we talk about, here if you want to prepare the FG account, what will you do in the FG account, sir? Here you will write to process 2 account. You will write here to process 2 account, right? This is what is written here. This is process 2 account. Then the office and administration overheads by cost of sales. The total cost will be transferred to cost of sales account, to finished goods account, that is transferred from finished goods, and here the selling and distribution overheads will be incurred, and finally it will be taken to costing P&L. In the costing P&L, cost of sales, whatever is the sales and your profit, or it can be loss also, by loss in case it is a loss, right? So these are some of the accounts, but mainly what you will be asked about is, mainly you will be asked about the process account, right? That is one of the most important part, the process account. Now you need to find out what will be the treatment of the normal loss and the abnormal loss. Normal loss treatment in the process account. What will be the normal loss treatment? Sir, you will write here by normal loss. You will write here by normal loss. Right? Let's say 50 units of the normal loss. You will write here in the units column 50. And if there is no scrap value, if you are not going to get any scrap value out of it, you will simply put like this, right? But if you are going to get the scrap value out of it, then what you will have to do is, you will have to write down the scrap value. Let's say it is 200 rupees scrap value, then you will have to write down the scrap value, that 200 rupees is the scrap value that we will be getting from the 50 units, right? Now, if this is about the normal cost, let's see what is given here regarding the normal loss. We have already given normal loss in the nature of weight loss, right? If it is a weight loss, then there will be no scrap value. Why it is given weight loss? That means here there will be no scrap value, right? Because weight loss is the material has evaporated. Now it has evaporated. How can you find out the scrap? Can you sell it and find out the scrap? No, sir, right? The units of the normal loss to be credited to the process account. If it is in the nature of a scrap having the realizable value, then it is to be credited to process account along with the realizable value, right? After that he says, if it is in the nature of the toxic scrap requiring some disposal cost, if there is some cost to be incurred, then the disposal cost will be taken here. To disposal cost, whatever the cost is required to be incurred, right, then the disposal cost will be taken on this side, right? So this is the treatment of the normal loss. What will be the treatment of the abnormal loss, sir? What will be the treatment of the abnormal loss? In case of abnormal loss, you cannot directly take, otherwise whatever is abnormal loss is directly taken to costing P&L account, costing profit and loss account, right? But in case of the process, how you have to take it in the process account, how you have to take the abnormal loss in the process account, let's try to find out. Let's say you have two direct material 100 units at the rate of 500 rupees, right? Two direct labor, let's say 300 rupees, two overheads, let's say 200 rupees, right? And I say here, by normal loss, 10 units at the rate of rupees 3, so 30 rupees is the scrap value on the normal loss, right? And by next process is 80 units. Now this is how it will be given. Let's say you have input 100 units, but your output is currently 90 units. Where are the remaining 10 units? The remaining 10 units will be your abnormal loss. It will be your abnormal loss. How to find out the value now? The important thing is how to find out the value. For that, what you have to calculate is, we have to calculate cost per unit of good output or normal output. Okay? How to find out that? Take out the total cost. What is the total cost here? 1000 rupees, right? 1000 rupees. But you are getting a scrap value out of the normal loss, which will reduce your cost, minus the scrap value of the normal loss, divided by what is the value of the good units. 100 units were input, minus 10 was the normal loss, right? So what will be the value here? The value here will be 970 divided by 90. 970 divided by 90, that comes to 10.78. At this price, you will record your abnormal loss, 10.78, and you will record your next process also. Right? So this is how the abnormal loss is to be treated. Now the question here is, in case there is some scrap value out of it, let's say how much it is, 10 into 10.78, that comes to 107.8, right? This is the value of scrap. Now, sir, this is the value of abnormal loss. Now, in case there is some scrap value, let's say 30 rupees is the scrap value out of the abnormal loss, how it is to be treated? For that, what you will do is you will prepare the abnormal loss account. For that, you will prepare the abnormal loss account, right? In the abnormal loss account, what you will take? You will prepare the abnormal loss account. In the abnormal loss account, here you will write to process account 107.8, and here you will write by sale. By bank you can write, or by scrap, by cash or bank you can write. By cash or bank. Let's say it is 30 rupees. So what to do with the remaining abnormal loss? The remaining abnormal loss will be transferred to by costing profit and loss account. By costing profit and loss account, right? 77.8 rupees. So this is how the abnormal loss account is to be prepared. I hope this much is clear, right? I hope this much is absolutely clear. So this is the treatment of normal loss and abnormal loss. Now, in case there is an abnormal gain, then what will happen, sir? Sir, it will remain same. In case of abnormal gain, what you have to do is you have to write here abnormal gain. And what is the value? Again, you have to find out cost per unit of good output. You have to find out the cost per unit of good output. At that price, you will value your abnormal gain as well as the next process, right? Just like the abnormal loss, you have to treat the abnormal gain, right? So this was regarding the abnormal gain and out. Treatment of the output of the process sold. These are small points, not much required. Now, the most important part here, sir, process inventories. Very, very, very important, right? And in this, what is important here is the inventory of WIP. That is what we are going to talk about, right? Inventory of WIP. Clear, sir? So in the inventory of WIP, what is your process? Let's talk about inventory of WIP. Inventory of WIP. Now in the inventory of WIP, what is your first stage? The first stage is the statement of equivalent production. The first stage is statement of equivalent production, right? How this statement of equivalent production is prepared, sir? How this statement of equivalent production is prepared? For that, what you take, whatever you have input, right? What is your output, or what we call it as particulars, right? We call it as particulars, then we call it as quantity. Then what is the cost incurred on that? Two costs we are going to take. One is the material cost, right? And the percentage of completion and the quantity. And the next one is the conversion cost. Conversion cost means the cost of labor and overheads, right? This is your labor plus overhead cost. Here also we'll write a percentage and quantity. Right? Now let's say you have input 10,000 units. You have input 10,000 units. You have converted into finished goods. You have converted into finished goods 8,000 units. Now this is 8,000. That means on these 8,000 units, the full quantity of the material and conversion cost has been incurred. Everything is incurred. That is why it is a finished good. So here the degree of completion will be 100%. Right? Degree of completion will be 100%. And what is the quantity? 8,000. 100%, 8,000. Right? The remaining is your closing WIP. How many units? 2,000 units. The degree of completion for that will be given, right? The degree of completion for that will be given. If the degree of completion is not given, then you have to consider it 100% for material, that is 2000 equivalent units, and 50% for conversion cost, that is 1000 equivalent units, if the degree of completion is not given. If the degree of completion is given, then you have to consider whatever is given in the question. This is one thing very important that you have to remember. Now, from here, you will get the equivalent units, right? So this is the first step. That is the statement of equivalent production. The next step here is, what is the next step here? This was the first step, sir. What is the next step? The next step here is the cost per unit of equivalent production. Statement of cost per unit of equivalent production. Equivalent production. Right? How to calculate it, sir? What is the cost that is incurred, sir? The cost incurred is material cost is incurred. Right? Let's say the cost incurred is 1 lakh rupees. Now, on how many units it has been incurred? On 10,000 units it has been incurred. So what is the cost per unit? 10 rupees. Right? What is the cost that is incurred? 10 rupees. What about the conversion cost, sir? Conversion cost, let's say it is 50,000. On how many units? Let's say it is 45,000. On how many units? On 9,000 equivalent units, these many units. Because the conversion cost is not incurred on 100% units, it is incurred on 9,000 units as of now, right? So that will be 5 rupees. So what is the cost? Per unit cost is 15 rupees of the completed unit, right? Cost per unit of equivalent production. Now the next step, the third step is you have to find out the value of FG. What is the value of FG, sir? How many units of FG? 10,000. How many units of FG? Sorry, 8,000, not 10,000. 8,000 units of FG. 8,000 units of FG, sir. And what is the cost incurred on that? Material cost is incurred, labor cost is incurred, 15 rupees is incurred on this, right? So the value of the finished goods here will be 1,20,000. After that, how to find out the closing WIP? Closing WIP, how many units of the closing WIP? Sir, here you have to be very careful with. For material, the number of units is 2,000, but for conversion cost, it is 1,000. So how will you calculate it? For 2,000 units multiplied by 10 rupees plus 1,000 units multiplied by 5 rupees. So that is 20,000. That comes to 20,000 and 5,000. So closing WIP value is 25,000. Right? So these are the steps that are involved in the statement of equivalent or in the inventory of WIP. Now this is the most important part, sir. Most important part. Right? Now, next, very important discussion points now. Sir, in case there is normal loss, in case there is normal loss, let's say the finished goods is 7,800. So there is a normal loss of 200. What will you do with this? Nothing, sir. Absolutely nothing. Nothing to be taken in the equivalent production. Only and only the quantity is to be taken. That's it. Clear? Sir, if there is a scrap value from the normal loss, what will happen? Sir, minus here, that will reduce your material cost minus the scrap value of normal loss. Right? That will reduce, this cost will be reduced in that case. Clear? Now, the next point here, sir, the next point here is, in case there is an abnormal loss, then what to do? In case there is an abnormal loss, then what to do, sir? Let's create an example like this only. Right? Okay, so I say the finished goods is 7,500, normal loss is 200, closing WIP is 2,000 rupees. right? Now that means the remaining is your abnormal loss. Abnormal loss 300. Sir, what will be the degree of completion of abnormal loss? Very important. Sir, the degree of completion can be either, if it is given in the question, then you have to take it whatever is given in the question. If it is not given in the question, you can take it two ways. One, either you take it 100%, 300, 100%, 300, or you take it equivalent to closing WIP. Whatever is the degree of completion of closing WIP, you can take that also. But what is the most appropriate part? Sir, if the degree of completion of abnormal loss is not given in the question, then take it 100%. Simple. Take it 100%. Clear? If not given in question, if DOC, that is degree of completion, take it 100%. Right? If given in the question, then we have to follow accordingly, sir. Okay, so cost per unit of equivalent production if there is any scrap value of the abnormal loss. Now there are two treatments for that. One, you can reduce from here also, scrap value of abnormal loss, but that is not the correct treatment, not logically correct. Why, sir? Because the abnormal loss, if you realize something out of the abnormal loss, it will not reduce your material cost, it will hit your costing profit and loss account. Right? So this should be ideally taken in abnormal loss account, not here. This ideally should be taken in abnormal loss account and not here. Clear? That is what the treatment is. Rest everything will remain same. Clear? Any doubts in this part? I hope this much is clear to you. Now, further we will talk about, there are two methods of evaluating the WIP. There are two methods of evaluating the WIP. The first method is the FIFO method. The first method of evaluating the value of WIP is the FIFO method. Right? Now, what is FIFO method, sir? Sir, in the FIFO method, you will be given the opening WIP. You will be given the opening WIP. Let's say it is 4,000 units. Let's say it is 4,000 units, right? Opening WIP on which material cost has been fully incurred. Material cost is fully incurred, that is 100%. And the conversion cost is incurred to the tune of, let's say, 30%, right? Then further data will remain same. Further data will be fresh input 10,000 units. Let's frame a question and try to understand it, right? Fresh input 10,000 units, right? After that it says finished goods 14, let's say it is 8,000 units, right? And then we will take whatever is there in the closing WIP. So I'll not take the treatment of normal and abnormal loss here, right? So I'm writing closing WIP as 6,000 units. So I'm taking a simple scenario here on which material 100% and conversion cost 50%, right? This is a simple scenario here. Normal and abnormal loss treatment will remain same. Now he says on these 4,000 units, some of the cost has been incurred. Some of the cost has been incurred. Material cost has been incurred. Let's say 60,000 rupees. And conversion cost has been incurred. Let's say 25,000 rupees. This is already incurred on the opening WIP, right? And in the current period, what is the cost incurred? Opening WIP is from a previous period. In the current period, material cost incurred is, let's say, 1 lakh rupees, and the conversion cost that is incurred is, let's say, 75,000 rupees. Clear? Let's try to solve this by FIFO method. He says try to solve it by FIFO method. So what will be the first step? The first step will be the statement of equivalent production. statement of, because this is the most important part, sir, in the process costing. If you get a good grip on this, that means the process costing is done, right? What is statement of equivalent production now? The statement of equivalent production says the first thing is input, then you take particulars, then output, then we will take material cost, right, and degree of completion and quantity. Then we will take conversion cost, percentage and quantity, right? So in the input column, what will you write here, sir? In the input column, the first thing you will write is opening WIP of 4,000 units, right? And a fresh input of 10,000 units. So the total input is 14,000. Out now in the particulars, opening WIP, what will be the output? 4,000 units. Now in this particular period, what is the cost? Is there any material cost which is incurred in this period on this 4,000 units? No, sir. Why no? Because here I have written the 100% of the material cost has been incurred in the previous period. So in the current period, there will be no material cost which will be incurred. What about the conversion cost? Sir, 30% of the cost was incurred in the previous period. 30% of the cost was incurred in the previous period. 70% will be incurred here. So here I will take 70%, right? So here I will take 70%, that is 2,800 equivalent units. So the FIFO method says that first you will process whatever is your opening WIP. First you will complete that, right? Then what is your finished goods? What is your finished goods? Here again you have to be very careful about. He says finished goods 8,000. Now out of this 8,000, first 4,000 is from WIP, and from fresh input it is only 4,000 units, right? This is from fresh input. Clear? So here I will write 4,000. Clear? On this, 100% of the cost has been incurred in this period, sir. 100%, 4,000. Right, sir? This is how the total output of 8,000 was there. 4,000 opening, 4,000 from the finished goods. What is left here is closing WIP. Closing WIP of 8,000 units. 6,000 units. 100% material cost 6,000. 50% 3,000, right? So from here your output is 14,000, input is 14,000, output is 14,000, right? And what is the material cost incurred in this period? On 10,000 units. And what is the conversion cost incurred in this period? That is 7,000 plus 9,800 units. Any doubts up till this point? This is how the FIFO method is to be done. Right? This is how the FIFO method is to be done. Clear? Now you will find out what is the next will be the statement of cost per equivalent unit. The next is statement of cost per equivalent unit. Right? Statement of cost per equivalent unit. The first is you have a material cost. Now, which material cost is to be considered, sir? Only the current period cost, this 1 lakh rupees, because we are calculating everything as per the current period. So, in the current period, 1 lakh rupees has been incurred on how many units? On 10,000 units. So, what is the material cost per unit? 10 rupees. What is the conversion cost? Conversion cost is 75,000 units, 75,000 rupees on how many units? On 9,800 units. So what will be the cost here? Divided by 9,800, that will come to 7.65. So total cost is 17.65. Right? This is the cost per equivalent unit. Now, when you want to find out the cost of the finished goods now, you want to find out the cost of the finished goods. This is again important here. Total value of finished goods. How will you find out? Total value of finished goods. Finished goods, how much? 8,000. Right? Some cost was incurred in the previous period, that was opening WIP. I will divide it into two parts, 4,000 and 4,000. This is your opening WIP and this is your current period. This is your current period. Right? On opening WIP 4,000, in the previous period, what was incurred, sir? Material cost was incurred, conversion cost was incurred. How much it was incurred? It was given in the question. 60,000 and 25,000. So this was incurred in the previous period. 60,000 and 25,000. Total 85,000 was incurred in the previous period. Plus current period cost. What is incurred in the current period? In the current period, only and only the conversion cost has been incurred. On how many units? On 2,800 equivalent units. What is the conversion cost that is incurred? That is 7.65. 7.65. So this comes to 7.65, 21,420. So this is the total cost for 1,06,420. This is the total cost of 4,000 units which started in the previous period, which will be completed in the current period. What about this 4,000 of the fresh input? Sir, simple. This is multiplied by 17.65. Right? This is straight away multiplied by 17.65. That comes to plus 70,600. Right? So combining this plus 1,06,420, total value of the finished good is this much. Right? So finished goods are divided into two parts. One is opening WIP, one is from the current period, that is the fresh input. Opening WIP 60,000, 25,000 was incurred in the previous period. In the current period, what is incurred? Only and only the conversion cost. On how many units? Sir, on 2,800 units, what is the conversion cost per unit? 7.65. So on 2,800 units, 7.65. This is what is incurred in the current period. No material cost incurred. Clear? So this is how the FIFO method question is to be solved. The same question can be done by the weighted average method. The same question can be done by the weighted average method. Right now, how to do it by the weighted average method? Let's see. Let's see how to do it by the second method, that is the weighted average method. Bam. The steps remain the same. The first step will be the statement of equivalent production. Statement of. Why I'm spending so much time on revising this? Because this is very important, sir. And if you are going to miss any of the points in this, then trouble can be there. Right? Okay. So statement of equivalent production. Here we will take input, then particulars, output. Then we have material cost, percentage and quantity. Then we have conversion cost, percentage and quantity. Right? Okay, now here again we have input 4,000 of the opening WIP and 10,000 of the fresh input. Right? This is what we have input. But in case of weighted average, we do not bifurcate. We do not say that opening WIP will be completed first. We do not know. Right? So what we do is we here simply write finished goods. We are simply write finished goods, that is 8,000. On that 100% of the material 8,000, whether incurred in the previous period, whether incurred in the current period, we are going to take the average cost, right? And the closing WIP. And the closing WIP of 6,000, 100, 6,000, 50, 3,000. Right? So this is comparatively simpler, sir. This is comparatively simpler, isn't it? So material cost incurred on 14,000 and it is incurred on 11,000. After that, statement of cost per equivalent unit. Statement of cost per equivalent unit. Now this is important again. In this case, what you have to take is, in this case, you will take the total cost. For example, material cost is there, right? Material cost will be taken as 1 lakh of the current period plus 60,000 of the previous period. You will take total cost here. Total 1,60,000 incurred on how many units? On 14,000 units. So what will be the cost? That comes to 11.43. Right? Similarly, for the conversion cost, sir, 75,000 incurred in the current period, 25,000 incurred in the previous period, total 1 lakh rupees have been incurred on 11,000 units, right? That means 9.09, right? So the total cost is 11.43 plus 9.09, that comes to 20.52. This is how the cost per equivalent unit will be calculated. After that, the finished goods cost will be calculated in the normal way, sir. In the normal way. Simple. If you want to calculate the finished goods will be how much? 8,000. 8,000 multiplied by 20.52. And if you want to calculate closing WIP will be 6,000 units multiplied by 11.43 plus 3,000 units multiplied by 9.09. This is how the closing WIP will be calculated, right? So this is the difference between the FIFO method and the weighted average method. I have taken it through an example so that it is absolutely clear to you. You can write it down. If you want to even revise at the last moment, you can revise it simple. Right, so this is all about the process costing that we wanted to discuss. This is all the revision of process costing, and in the process costing, the most important part is the valuation of inventory. This part, the WIP part, right? This is the most important part, sir. Very, very, very important, right? So in the next video, we will do the joint and byproducts. And after that, we'll move on to the standard costing, which has been one of the most demanded topics. I'll cover standard costing, marginal costing, right? We'll cover after that budgetary service is comparatively easier. So in the next 2 days, we'll try to cover. The next video will be on the joint and byproduct costing, right? So you have to share with all your friends. And if you have not yet subscribed, please subscribe to the channel and press the bell icon. Till then, stay safe, stay healthy, keep studying, keep sharing. Thank you so much.